Since its inception in 1847, Cartier has gained a reputation for timeless, high-quality pieces, serving a long list of royalty and celebrities around the world. When Aldo Ciapullo created the Love Bracelet in New York in 1969, he was inspired to make a new type of design. The bracelet is simple and unisex, making it perfect for everyday wear, but what made it unique is that it requires a partner to bolt the clasp on. With the help of celebrity marketing and endorsements, the bracelet quickly shot up in popularity and is now considered one of the most recognizable items from Cartier. Despite some short-term volatility in the global luxury sector, the brand is seeing an uptick in profits year over year, sitting at number 3 for value sold. But what has let this legacy brand stay on top? The secondary market for bracelets on auctions and marketplaces stand at $32 million for Cartier, with most of the records from the last 5 to 10 years. The trend lines for value sold between Cartier bracelets and bracelets within the global jewelry market follow the same path. But while Cartier shows a growth in the last year, it's in contrast to the overall decrease in value sold for bracelets overall. Not only in value sold, Cartier's bracelets also sit higher than others in terms of cost. The average price of a Cartier bracelet is about $41,000, whereas bracelets in the global market indexed are averaged at $16,000. What's interesting is that Cartier's most popular item, the Love Bracelet, is an outlier among Cartier's bracelet portfolio. While the price of a Cartier bracelet sits roughly $25,000 above the average bracelet, the Love Bracelet has an average price of $5,400. In general, Cartier jewelry is priced higher than other brands. A Cartier piece will cost about $33,000 compared to the global market average of $30,000. The data also shows that diamonds and diamond mixes overwhelmingly make up the market in terms of gemstones. Diamonds are the most popular gem found in the jewelry industry, making up 45% of the market share. Cartier follows a similar number, with diamonds alone making 31% of its gem portfolio. And true to its reputation for quality, Cartier's jewelry tends to have 10 carats or higher.
Within the last 10 to 20 years, we've seen more activity in the sales of jewelry and gems in the secondary market. Given the establishment of online auction houses, marketplaces, and e-commerce channels, consumers have more options to list items for sale, to compare prices, and to buy across multiple international locations to get the best item for them. So when we look at the charts, we see there's more activity in the last 20 years because the internet and marketplaces are playing a more active role in the prices and the trading of assets in the secondary markets. And for auction houses, this means that there is more demand for them to explore other avenues to diversify revenue. And so we've seen Sotheby's and Christie's establish more platforms to sell jewelry, gems, and handbags with marketplaces and with e-commerce channels. This enables auction houses to have more predictable and repeatable revenue without having to wait for scheduled sales of artwork and other items, and it allows them to have more liquidity in the markets. When we look at the data on sales by value in each region, it's interesting to see that Cartier has a stronger market presence in terms of value in lots sold in London versus New York, whereas Tiffany & Co., an American company, has more presence in New York versus London. But when you think about the fact that Cartier is a French brand with natural proximity to the UK and London, it makes sense that a lot of the clients and the brand recognition and support would be stronger in London and Europe than in the US. This means that, for example, if you were to try and sell an item that was made by Cartier, you're much more likely to get a higher price for your item, your jewelry, in Europe, in Geneva, London, or Paris, than you would in New York. Looking forward to the next 12 months, we expect the luxury markets to continue to be fairly stable and resilient. In times when there's economic uncertainty, people still continue to invest in jewelry and gems and handbags because they trust the brands that they're investing in. You know, Cartier has been established since the 1800s, and people trust that when you buy a jewelry, a necklace, or a watch from Cartier, that the value is still going to be retained, much like it would with gold or with other alternative assets. While we've seen a general up and down cycle in the markets in response to economic downturns and upturns, the prices achieved for jewelry in the last 12 months are very similar to what we saw in 2023. And so consumers are still investing in these high value luxury items because they trust the brands and they trust that the value that they're investing in the brands will stay and continue even as we go through these different economic cycles.